Hey everyone, welcome back to the channel. Stay focused, grab a cup of coffee or tea, isolate yourself because this is the most important video of the year. We're talking about SpaceX, and this could be decisive for your financial future. Look, I'm not gonna sugarcoat this. What we're about to discuss might be the single biggest investment opportunity of the decade, or it could be the most overhyped stock offering since the dot-com bubble. SpaceX is going public in 2026, potentially as early as June. We're talking about a $1.5 trillion valuation, raising up to 50 billion, which would make it the largest IPO in history. But here's the thing, everyone's talking about rockets and Mars missions, and they're completely missing what this IPO is actually about. By the end of this video, you'll understand exactly what you're really buying, the risks nobody's talking about, and my personal strategy for how I'm approaching this. Let's dive in. Alright, let's get everyone up to speed with what's actually happening right now, because things have moved fast in the last few weeks. On February 2nd, 2026, Elon Musk dropped a massive announcement. SpaceX is merging with xAI, his artificial intelligence company. The combined entity is valued at $1.25 trillion pre-IPO. Now, this is huge because xAI was burning cash trying to compete with OpenAI and Google, but SpaceX has been generating serious profit. We're talking $8 billion in profit on roughly $15 to $16 billion in revenue in 2025. Multiple sources confirm SpaceX is targeting a mid-2026 IPO, potentially around June 9th, and yeah, that date matters to Elon because it's when Jupiter and Venus align. Very on brand for him. The company has already started the formal bank selection process, what they call the bake-off on Wall Street, with Morgan Stanley bringing back their veteran dealmaker Michael Grimes specifically for this deal. Here's where it gets real. They're targeting a $1.5 trillion valuation for the entire company, looking to raise more than 30 billion, possibly up to $50 billion. To put that in perspective, that would be bigger than Saudi Aramco's IPO, which only raised $29 billion, though Aramco was valued higher at 1.7 trillion. They only sold 1.5% of the company. SpaceX is planning to sell significantly more. Now, here's something critical that just came out 2 days ago. SpaceX is considering a dual class share structure. This means Elon and insiders would get shares with 10 or even 20 votes per share, while regular retail investors like us would get 1 vote per share. They're also expanding the board of directors to prepare for public company governance. So right off the bat, understand this. You're not buying control. You're buying economic exposure to what Elon and his team decide to do. And honestly, given SpaceX's track record, that might not be a terrible thing. Here's where everyone gets it wrong. People think they're investing in a rocket company. They're not. Let me show you the numbers that completely changed my perspective on this IPO. In 2025, SpaceX generated approximately $15 billion in total revenue. Want to guess how much came from Starlink? $10.4 billion, that's 69% of their entire revenue. And in 2026, analysts project Starlink will hit 18.7 billion, which would be 79% of total revenue. Let me repeat that. By the time this IPO happens, roughly 8 out of every $10 SpaceX makes will come from satellite internet subscriptions, not rockets. The subscriber numbers are insane. Starlink went from 2.3 million subscribers at the end of 2023 to 4.6 million at the end of 2024 to 9.2 million by the end of 2025. That's literally doubling every single year with mathematical precision. They're adding over 20,000 new customers every single day. And they're forecasting 18.4 million subscribers by the end of 2026. The analysts at Payload Space think SpaceX might actually be managing this growth intentionally, keeping it at exactly 100% year over year. How? Free terminals in many markets, aggressive international pricing, and constant expansion. They're now in 155 countries. Now here's where it gets interesting for us as investors. Average revenue per user globally is about $70 per month. In the US, residential service is $120 per month, but internationally it can be as low as $45 per month. Maritime customers, they're paying $34,000 per year. Aviation, $300,000 per year per aircraft. The gross margins are improving rapidly. In 2024, Starlink was running at about 7% gross margins, not great. But by 2026, they're projected to hit 25% gross margins. That's the shift from capital intensive build out to cash generating infrastructure that every telecom investor dreams about. Meanwhile, the rocket launch business that everyone thinks is the main story, it generated about $3.5 billion in 2023 and is growing at only 9% annually. It's becoming commoditized. SpaceX completed 138 launches in 2024. They're the dominant player, but it's turning into a lower margin business that supports the real moneymaker, Starlink. With the xAI merger, we're now also buying into Elon's vision of orbital data centers in space. He's claiming that within 2 to 3 years, the lowest cost way to generate AI compute will be in space. SpaceX recently asked the FCC for authorization to launch up to 1 million satellites for this orbital data center concept. Is this brilliant or insane? Probably both. But that's Elon for you. Alright, let's talk about why this could absolutely work and why I'm seriously considering a position. SpaceX has achieved something extremely rare, a dual monopoly. They control the primary global transport layer for space through reusable rockets, and they control a massive utility service through Starlink. Their launch costs are $2,000, $3,000 per kilogram versus the $10,000, $20,000 per kilo that the industry used to charge. Falcon 9 boosters are now certified for 40 flights each. Starship is targeting $2 to $10 million per launch. This is a cost structure nobody else can touch. Every satellite SpaceX launches makes Starlink better. More satellites equals better coverage, equals better speeds, equals more customers, equals more revenue to launch more satellites. It's a flywheel that's already spinning at 9,000 plus satellites. And here's the kicker. They're the largest 4G coverage provider on Earth, not just satellite internet. They're becoming a genuine telecom competitor with their direct-to-cell service covering 22 countries and 12 million users. SpaceX secured a $5.9 billion Pentagon contract in April 2025 for 28 national security launches through 2029. The US military is now using Starlink everywhere. It's been called indispensable, from embassies to battlefields. The Department of Defense is even using xAI's Grok for military intelligence analysis. Even if consumer spending collapses, SpaceX has long-term government contracts that'll keep revenue flowing. Amazon's Project Kuiper, they haven't even started deployment. Blue Origin, years behind. AST SpaceMobile has 6 satellites versus SpaceX's 9,000. OneWeb went bankrupt and got acquired. The honest truth is that even competitors trying to launch satellites use Falcon 9 to do it because they have no other cost-effective choice. A $1.5 trillion valuation at $23.8 billion in projected 2026 revenue is roughly 63x revenue. Sounds crazy, right? But the market is pricing this like a tech platform, not an industrial company. Traditional aerospace companies like Lockheed Martin trade at maybe 1 to 2x revenue. Nvidia, it was trading at insane multiples during its growth phase. The question is, do you believe Starlink is the AWS of space connectivity? Because if it is, that multiple suddenly makes more sense. Now let's talk about why I'm not backing up the truck and going all in. There are some serious risks here that could blow up this investment thesis. Let's be real, $1.5 trillion for a company doing 15 to 16 billion in revenue is pricing in absolutely perfect execution for the next decade. One major stumble and this could crash hard. For context, SpaceX would be valued higher than Amazon at $1.4 trillion and Meta at $1.3 trillion. Companies that generate hundreds of billions in revenue and massive free cash flow. SpaceX is still in growth mode with significant capital requirements. While SpaceX claims they've been cash flow positive for years, we don't have audited financials yet. When they go public, they'll have to disclose everything. There's been reporting that Starlink's EU subsidiary made $2.7 billion in revenue in 2024, but only $72 million in net profit, less than 3% profit margins. Now, that could be tax optimization, or it could indicate the business isn't as profitable as the narrative suggests. We won't know until we see the full prospectus. Elon Musk has become one of the most polarizing figures on the planet. His political involvement, Twitter controversies, and public statements create reputational risk. Now, here's the thing, so far it hasn't mattered. Governments and militaries can't opt out of using SpaceX because there's no viable alternative. But can that last forever? What if serious competition emerges while SpaceX is dealing with an Elon related PR crisis? The entire growth story depends on Starship working. Right now, Starship tests keep blowing up. A recent test in January 2025 ended with debris raining down over the Caribbean, and the FAA grounded the program. The FAA also flagged that proposed flight path changes could disrupt commercial air traffic. SpaceX needs Starship to deploy V3 satellites, 60 per launch instead of 28 to 29 on Falcon 9. The orbital data center vision, completely dependent on Starship achieving operational status. Any significant delays here crater the growth projections. The FAA proposed $633,000 in fines for license violations. There are environmental concerns about Starbase in Texas. Internationally, there are questions about data sovereignty with Starlink operating in 155 countries. The xAI merger adds another layer. xAI's Grok has faced regulatory probes for enabling generation of problematic content. The Committee on Foreign Investment in the United States might want to review this merger given the defense contracts and foreign ownership questions. Blue Origin just announced TerraWave, targeting 6 TBP's symmetrical data speeds using LEO and MEO satellites. Amazon has Project Kuiper coming. China is deploying their own mega constellations. Yes, they're all years behind. But once they launch, SpaceX's pricing power diminishes. Telecom is notorious for becoming a low-margin commodity business once competition arrives. Even if you get shares at the IPO price, there will likely be a 180-day lockup period minimum. With a company this large and this volatile, a lot can happen in 6 months. And if you're buying pre-IPO shares on secondary markets, those can be locked up for 5 to 10 years with zero liquidity. Alright, here's how I'm personally thinking about this. This is not financial advice, I'm just sharing my thought process, and you need to do what makes sense for your own situation. If I participate in this IPO, I'm allocating no more than 5% of my total portfolio to the position initially. This is a high risk, high reward speculation, not a core holding. Why 5%? Because if SpaceX doubles, that's a 5% gain to my total portfolio. Meaningful but not life-changing. If it gets cut in half, that's only a 2.5% total portfolio loss, painful but survivable. I'm not buying anything, not on secondary markets, not through those pre-IPO platforms, until I see the actual IPO prospectus with audited financials. I need to see real profit margins broken down by business unit, actual Starlink subscriber churn rates, full debt structure and capital requirements, the actual ownership structure and lockup terms, and management's discussion of risks, especially around Starship and regulation. Historically, mega IPOs see huge first-day pops driven by retail FOMO, followed by significant pullbacks once reality sets in. Look at what happened with Coinbase, Robinhood, or even Facebook, which dropped 50% in the first few months after IPO. My plan: watch the first week carefully, take notes on the actual IPO pricing versus the expected range, first-day institutional buying behavior, early analyst coverage and price targets, and trading volume and volatility patterns. If there's a pattern I've learned, it's that many mega IPOs offer better entry points 1 to 3 months after the initial offering. The hype fades, early investors take profits, and lockup expiration fears create selling pressure. I'm setting price alerts and will be watching for a pullback to what I consider a reasonable valuation entry point. What's reasonable? For me, it's when the revenue multiple compresses closer to 40-50x forward revenue instead of 63x. That might never happen, and that's fine. I'll miss it. If I do establish a position, I'm holding minimum 5 years, probably 10. This is a secular trend play on space infrastructure and global connectivity. The quarterly volatility will be insane. Elon will say something crazy, a starship will blow up, whatever. I'm mentally preparing to potentially see a 50% drawdown at some point and not panic sell. That's why position sizing is so critical. If the SpaceX valuation is just too rich for me, I'm also looking at traditional aerospace companies that might get re-rated as space becomes a real sector, like Lockheed or Northrop, ETFs that are positioning for space economy exposure and waiting for other space companies to IPO in SpaceX's wake. There will be copycats and competitors. For those comfortable with options, if SpaceX options become available post IPO, I might consider selling cash secured puts at strikes below my target entry price. This lets me generate income while potentially acquiring shares at my desired valuation if the stock pulls back. But that's advanced strategy stuff. Don't mess with options unless you really understand them. Let's zoom out for a second because this IPO is happening in a really specific market context that matters. SpaceX isn't alone. OpenAI is also planning to potentially go public in 2026, possibly at a $500 billion valuation. Anthropic raised funding at a $380 billion valuation and could follow. What we're seeing is a wave of mega IPOs from capital intensive tech companies that need public market capital to fund their expansion. This is different from the 2020-2021 SPAC mania. These are real businesses with real revenue, but they're going public earlier in their profitability journey than traditional companies. Here's what Harvard Business School professor Matt Weinzierl said about this, and I think it's really insightful. These IPOs are functioning as risk transfer mechanisms. The long-term uncertainty that was concentrated with private equity investors is being transferred to the dispersed public market. In other words, venture capital and private equity have made their money. Now they're asking if retail investors and institutional funds want to fund the next decade of growth. That's not inherently bad, but understand that's what's happening. If you believe we're at the beginning of a multi-decade space economy build-out, satellite internet, orbital manufacturing, space tourism, lunar bases, Mars colonization, then SpaceX at $1.5 trillion might actually look cheap in 20 years, but that's a big if. Morgan Stanley estimates the global space economy could grow from 630 billion in 2024 to 1.8 trillion by 2035. If SpaceX captures even 30% of that market, you can justify the valuation. The question is, how much of that growth is already priced in? This IPO is happening in mid-2026 and we need to watch the macro environment. If we're in a recession, if the Fed is still dealing with inflation concerns, if there's a broader market sell-off, that will impact the IPO pricing and performance. Conversely, if tech stocks are ripping and AI hype is still at fever pitch, SpaceX might price even higher than $1.5 trillion, which would make me more cautious. Alright, let's bring this home. Here's what you need to remember. The SpaceX IPO is really a Starlink IPO with a rocket company attached. You're betting on a satellite internet monopoly that's growing at 80-100% annually, becoming the dominant global connectivity infrastructure for the next 50 years. If you believe in that thesis and you can stomach the volatility, there's genuine potential for significant returns. This could be like buying Amazon or Google early, companies that seemed insanely overvalued at IPO but went on to dominate their markets. But the valuation is stratospheric, execution risk is real, regulatory threats are mounting, and you're buying a non-voting economic interest in whatever Elon Musk decides to do next. That's a lot of faith to place in one person, no matter how successful they've been. I'm cautiously interested with a small position, strict entry criteria, and a 10-year time horizon. This is speculation, not investment. It's the kind of bet where you need to be comfortable losing your entire position because the upside could be 10x or more. For most people, if you're asking, should I invest in SpaceX? The answer is probably no, or at most a tiny speculative position. If you're asking, could this be life-changing? The answer is yes, for better or worse. We are going to learn a lot more when the actual prospectus drops. Read every page of that thing, look at the risk factors, understand the capital structure, compare the metrics to other high growth tech companies. And remember, there's no FOMO trade worth wrecking your financial life over. If you miss SpaceX, there will be other opportunities. History doesn't repeat, but it rhymes. In 10 years, we'll either be talking about SpaceX like we talk about Apple and Microsoft as one of the defining investments of the era, or we'll be talking about it like WeWork as a cautionary tale about believing the hype. I don't know which it'll be, but I'm definitely watching closely. Thanks for watching, everyone. If you found this analysis helpful, smash that like button and subscribe for more deep dives on major market events. Drop a comment below with your thoughts. Are you in on SpaceX or are you sitting this one out? And seriously, this is just my opinion based on publicly available information. Do your own research, talk to a financial advisor if you need to, and never invest money you can't afford to lose. I'll see you in the next one.